Thanks for joining us today. My name is Josh Felker. I'm analyst here at CB1 Capital. Today we're joined by Margaret Brodie, CEO of Rubicon Organics. Rubicon Organics is a premium and super premium company out of BC, Canada. Thanks for joining us today, Margaret.
Thanks, Josh, for having me on.
So I know you've been at Rubicon for about a decade now. That's more experience than most people in our industry. So congratulations on that. It's been a very frustrating industry, and not a lot of people have stuck around through it. So kudos to you. It really shows ability to get through tough issues.
Survive the downtimes to get to the other side, which I think is where we certainly are seeing the Canadian industry today.
And on the U.S. side as well, it's the narrative right now. Victor is those who could just live long enough to see the spoils. But you've been at Rubicon for a decade now. I know you've been a CEO for the last 2 years. I'm just interested, looking back at the last 2 years. Is there anything that you're proud of? Are there any points of execution that you could point to that is a proof point of your ability to execute on your strategy?
Yeah, well, firstly, I think as any good CEO and investor knows, you don't do it alone. You do it with a team, and we deliver some of the best premium cannabis in Canada. Out of our Pacifica facility in Delta, BC, just here in the Lower Mainland of Vancouver, we have an organic certified facility, and because we deliver high quality, best in class products out of that facility, we, as the market was down, really said we don't want to risk our balance sheet. How can we grow the business? So we grew the business in the last few years by launching new differentiated products into the market using the power of our brand strength. In 2023, we launched into the edibles category. We were the first in Canada to bring live rosin edibles to the legal market. We quickly grew to, I think we're around 28% of the premium edibles category in Canada today. And then last year in 24, we did the same strategy with vape. And within less than a year, we had 55% national distribution, excluding Quebec, which doesn't carry vape, and captured 15% share of that category. Number 2 position in live resin vapes. But it's all about execution. And we were capacity constrained. Market was down. There was lots of price compression. So we had to be smart with our capital, and that's what we did. And now we're ready to grow again, and we've just acquired a new facility, which I'm also very, very proud of, which will add about 40% annual production capacity to our business.
Got it. Okay. So on the narrative within Canada, I know a lot of ignorant investors sometimes look at Canada and say, oh, it's a maturing market. There's not enough growth. I think that's generally at a higher level. And once you break it down at the company specific level, it's much different. But could you update us on your growth narrative over the last few years and then your growth strategy on a go-forward basis, obviously including that new facility?
Great. Okay. Well, the last few years, the market was pressured. There was certainly no one coming to save you from a capital perspective. So we looked at our business and said, there's opportunities to grow outside of taking significant financial risk. We toured over probably 100 facilities and found some wonderful contract growers to help us to meet the demand for in particular, our 1964 brand. We have tremendous demand for that. So in 25, we've contracted about 2,000 kilos of biomass. In 23, we launched edibles to grow our business. We were the first to market, as I mentioned, with live rosin edibles. Last year, we grew about 20% with our vape launch, but also overall with our business. And in both of those years, you've got to remember in 23 and 24, any growth is pretty remarkable because we were in a price compressed market. So we were moving more volume, but you have to be pretty clever and start to build on brand strength to continue to grow your business. That being said, looking forward, we've got a couple of exciting things happening. One is we've got a new facility we bought early this year and closed it in June, expecting a license anytime from Health Canada. And I say expect in the fourth quarter at some point here. We are very bullish on the 40% production capacity increase it's going to drive for us. But also, look, brands on shelf and what's happening in the Canadian marketplace, the provinces control the distribution, and anything get listed that retail stores can purchase. If you have not been working with them and established presence, relationship, rate of sale, and ability to deliver on time in full, you're not going to continue to be listed. And a lot of companies are trying to come back and get on shelf, and they can't. So I think the shelf in Canada has really been built, and it's time to grow off of the back of that and build this into the strength of your brands.
Oh, I love that. Yeah, I definitely see the shift in Canada for sure. Could you update us on any optimization or efficiency initiatives that you have underway? I heard some rumblings from your last conference that got me pretty interested.
Yeah, I'm really excited about this too. And we put in place pre-roll automation in June. We'd held off doing it because there was really, we speak to a quality story, and we need the quality of our pre-rolls to match have the value for money. But we're seeing, it cost us about $1 million for the project. We expect annualized over a year, it's going to be about $1 million in gross margin savings to our business. So really, really exciting. We've got a series of other projects, and any good manufacturer will tell you every year you're looking at your COGS line, not as a relative to your gross margin, but how am I reducing my COGS line? And we've got a series of projects we're working on. You're going to expect to hear us say more over probably the next 6-9 months. But for now, it's about throughput, volume, and cost efficiencies to really sweat our existing assets.
All right. So with the new Cascadia facility under your belt, I'm just wondering what new segments or capabilities that facility may unlock.
Great question. So Cascadia is an indoor environment, and our Pacifica facility based in Delta is a hybrid greenhouse. Firstly, from a cultivation perspective, there are naturally things that will grow in a hybrid environment differently than those in indoor. We're going to keep Pacifica certified organic, which is our nameplate for Rubicon Organics and for Simply Bare Organic. And we're going to use and learn at Cascadia how we can grow hydroponically and what results we can get. We're really excited about that. There's some genetics that grow really well under indoor lights, and we're bred for that environment. So I think there's some genetics that haven't been as successful as they could be from a yield perspective at Pacifica. So I think we're going to be able to maximize that a little bit more. But once we get those more maximized in the indoor environment for the 1964 brand, we'll really be able to start with that additional capacity to fill the demand that we have. We have tremendous demand for large format bags. We haven't been able to fill that for that consumer. A very heavy, regular consumer loves a large format bag. They want to buy great weed at a great price, and you get a better pricing slope when you buy a larger format. We've got lots of demand for that, and so we're excited to be able to fill some of that.
Got it. Yeah, I guess I could corroborate that. When I am smoking, I'm probably one of the larger volume smokers, and I have been, largely locked out from the Rubicon brands because your flower is so good. But if I'm buying, $50 rates, I end up smoking too much for that to be cost intelligent. So, but I would say though, you
that all the time. That is probably the biggest feedback we get, in particular to the Ontario market, is we want more large format from all of your brands. So, we're here to look to satisfy that.
Yeah. No, a good example would be the Blue Dream mounts that I picked up from you last week. The second you see that, that flower's available at a price that isn't, 40, 50 an eighth, you kind of jump on it because the comparable quality between others. I'm very happy to see you enter that segment. It is absolutely necessary.
Well, I have
people like myself.
There's a new exciting drop coming this week in Ontario called Apples and Bananas. Really well-known genetic going into 1964. Very excited to have it drop. And the terpenes that we've been hitting off of that are, I think, industry leading. We've been so excited to the extent that we went back and retested because we thought, is there a change in the testing methodology? Is this actually what's coming through? And I believe the first drop in Ontario is going to be, I think, over 5% terpenes. Truly, we checked it. So no change in what we're doing, just in terms, refinements in our facility all the time, but no change in our testing methodology.
Yep. And obviously the genetic focus is, once you start speaking to Mickey Hash and the people over there, you understand the genetic drops. You understand why every flavor you drop is one of my favorite strains that's already out. You saying apples and bananas as a connoisseur, that's something that I've been looking for in the market that hasn't necessarily been in the market. So yeah, I love where your head's at.
And I think I'm going to interrupt you there, Josh. I know we're just doing 5 questions, but I'm going to say there's one thing that's really important, that as we look at any market as it matures, whether it's fashion or Scotch or even even in wine industry, there's always going to be companies playing at the top leading with, whether it's in our industry, the equivalent would be avant-garde fashion and new drops of genetics. And that's what Rubicon's looking to be. We're not looking to be the company that drops large volume, low quality weed. We're looking to be your absolute connoisseurs, Canada and the world's leading genetic house, and bringing new and exciting things all the time to people. And there's a real place for us to emerge in that space.
Got it. Yeah, and I think the success there speaks to your brand strength and how some of your non-flower strains have really picked up second they hit the market. So yeah, loud and clear. Obviously, very exciting dynamic in the Canadian market today, and uncertain how sustainable it is, either from a total point of view or from a company specific point of view. International market's very interesting. I'm just interested in what your international strategy is and how you kind of expect that to roll out over the next few years. I know you've talked about it. I know you released a small export this year, but interested in your forward strategy when it starts to become a little more sizable.
I think the key word here is strategy. I've said before, and I'll say it again, we're not traders looking to sell hockey bags of weed to sell under someone else's brand. We're brand builders. Our vision is to build the most trusted premium house of cannabis brands. And I didn't just say in Canada. So, looking at that, I think there's going to be natural movements of price, in particular the value and mainstream qualities. Canada currently is the home of quality weed being exported into the world. But we can't assume that will remain forever. There are great competition coming from Thailand. Colombia is turning on, various other places in the world. So what do we need to do to continue to win in that market? In my view, we need to be better, and that speaks to genetic and premium weed, and that's where we want to play. So we are not announcing what our strategy is. We are still doing the work. I expect by the end of this year have shipped to potentially 4, but definitely not definitely. I expect that it's 3 countries by the end of the year at minimum, and look beyond that into 2026 and 27. We're brand builders, so I would say that's how we're looking to go forward. We will not be. It will be off the back of the strength of our Canadian brands. We will not diminish or come away from the Canadian market at all. We're bringing on more capacity. We're looking at growth in the future. We want to stay strong in Canada, in our domestic market, to manage any ups and downs in the market that we expect that will be there. But I do expect that we'll be bringing brand to the international market.
Got it. And it's worth a follow-up, but when you mention competition coming online internationally, you note Thailand, you note Colombia, Latin America. I know a lot of these markets is kind of bulk input, bulk export, not necessarily competitive with you on the premium side. How much competition do you actually see within the premium category for international markets or international exports?
Well, I think we shouldn't have the hubris to assume that capable people from around the world aren't going to go and figure this out. But the challenge is around consistency. And so building brand is about delivering on consistent product quality and delivering for your customer consistently. And we've demonstrated that we can do that. I think that we're going to see individual drops from places. We've even seen that in the Canadian market. But being able to deliver that consistent, trusted brand promise is where I think Rubicon will win. Do I think there's going to be good quality that comes from all over the world? Absolutely. And bring on the fight. We're here to compete.
I love it. Okay. Well, I really appreciate the time today, Margaret. Thank you so much for joining us. I will catch you after earnings for our next 5 questions. Very excited to see the print and excited to hear you talk about it.
Thanks, Josh.
Thanks, Margaret. Have a great day.